Chair Robert Rustino.
Here.
Vice Chair Richard Optigrove.
Here.
Secretary Andrea Isaac. So we're complete.
So this the audit committee meeting, the first order of business is a presentation of the corporate audit by Lunsford and McCormick as part of your packet.
Here. All right, thank you so much. I'm Jenna Sheehan. I'm a principal of Lunsford and McCormick. Thank you so much for having me here today to present the results. We'll keep it brief. Really no issues, no concerns that came up as a result of the audit. So within your packet is the draft financial statements, management letter, and the communication with those charged with governance. We'll start with that communications letter that really just details out what we are required to communicate to you as part of the audit. Beginning with our responsibility, which is to express an opinion that the financial statements present fairly in all material respects in accordance with U.S. GAAP. The plan, scope, and timing, there was no change to that. We are required to be compliant with all ethics requirements regarding independence. On the next page, you have some of the more internal policies, procedures. So your significant accounting policies did not change from 2025. There's no new accounting standards that were required to be implemented. Your significant accounting estimates and audit risk items, those all remain consistent year over year. Your most significant estimate is the valuation of outstanding loans. As you'll see in the financial statement, there's no allowance needed. All are deemed collectible. We do confirm those balances just to ensure that the outstanding balance is accurate. The financial statement disclosures also remain consistent year over year. We do note a couple of those, but we'll go through those in a little bit more detail when we look at the financial statements. We did not have any difficulties encountered during the audit. We thank Amy and her team for getting us everything we need well in advance of the audit, giving us anything we need as kind of follow-up questions. We had no adjustments, so no uncorrected or corrected misstatements, no disagreements with management, and then there were no consultations, other significant issues, or anything that would be required to be communicated to you in this letter. Your other significant matters, findings, and issues are just required, are related to your RSI and SI, which are your management discussion and analysis, which is the first part of your financial statements, and then the sub-grant and the loan fund schedules that are at the back of your financial statements. We'll switch over to the management letter, which we were able to issue a no material weaknesses letter consistent with prior years. If there were any material weaknesses or significant deficiencies, we would be required to communicate those to you in writing. We cannot say, as part of our accounting standards, that there are no significant deficiencies, but we can say that there were no material weaknesses, and that's the letter you see in front of you today. All right, and then on to your financial statements. The first part, really the most important part, is that independent auditor's report. So you'll see that there is a clean opinion or an unmodified opinion that financial statements present fairly in all material respects in accordance with U.S. GAAP. The one difference this year that you'll see in your financial statement is that there was no single audit required. So based on your overall loan activity, which technically it's really just the new loans, unless they're those loans are at risk, then they would be included in the balance, and then your sub-grant activity. So based on that, you didn't reach the $750,000 this year, so just a little less in terms of pages for the financial statements this year. And then if we flip through, we'll skip through the management discussion and analysis because we'll kind of touch on all of that stuff when we look at the numbers. So starting with your balance sheet on page 7, overall a slight decrease in your total assets, a decrease in cash just based on your overall operating activity. Your grants receivable is really just a matter of timing of the receipt of funds when those funds came in when they were requested. And then your loans receivable, you'll see a big jump in that current portion. And that's really based on, one, the DLD loan was interest only through July, so you have a full year of interest principal payments coming up during 2026. Overall, your total loans were down about $85,000 based on payments of $97,000 offset by new loans of $13,000. And again, as I mentioned, no collection issues, no allowance required on those loans. And then your restricted net position, just under $2.4 million at the end of 2025. Your statement of revenue, expenses, and changes in net position. You'll see your grant revenue down a little, significantly year over year, just based on overall activity. So there were more significant loans in the prior year. And also your sub-grants were funded mainly using the post-closeout program income. So on some of those grants that were closed, using that income to fund those sub-grants.
So this is a question, right? So when we see the grant revenue down, is this like, kind of like my bank where you don't account for the grant revenue until you allocate it or spend it?
Yeah.
This doesn't, like when you, as a layperson, you just look at this, it doesn't mean we got 700,000 less in grants. It just
Correct.
means that we haven't allocated it, and until we allocate it, that it doesn't count,
Because
it
everything
doesn't
is
show up in this line.
Yeah, everything's a reimbursement basis.
Gotcha.
So we might allocate, $2 million, but if the grant applicant or sub-grant recipient only spends $50,000, this line's only gonna show
Right.
$50,000.
So but it'll show up on our balance sheet as a receivable.
It does
It
not
doesn't show up at all.
until
It's just
it's
out there.
actually, right,
Okay.
requested
So
for
it-
reimbursement.
Does that show up anywhere on our financials?
You'll see a little bit of the commitment footnote. It'll say like you have $2.8 million of
I
commitments.
got you,
So
right. It's
that'll
not even,
kind
it's
of-
not even on our balance sheet, it's just
No.
out there.
Right,
But we can use it, but
Correct.
until we use it, it doesn't, we think it's
correct.
okay. Okay, that makes sense.
All right, so overall, your change in that position was just down $222,000 year over year. And that's really based on that consistent expense and that decrease in of total operating revenue. Your operating expenses, your sub-grants, again, really just based on the need of those sub-grantees. But then your professional and administrative expenses down related to consulting expense, again, just based on that sub-grant loan activity, depending on what is needed year over year. And then just to touch on a couple of the footnotes quickly, footnote 2 is your loans receivable,
What page?
sorry, page 11. So footnote 2, your loans receivable, you can see that that first line in that chart is current status, showing that everything is current. There's nothing past due on any of the loans, so all good news there. That's something to take into consideration when we're looking at, is there an allowance necessary if people are late on their payments? And then again, footnote 3 is your economic dependence. So just saying that all of the grant revenue, essentially all of the revenue from the corporation is received from the EPA. And then as I mentioned, that commitment footnote. So again, showing your outstanding projects. So you have 2 projects with about $430,000 just about remaining on those. And then you have a loan that was committed for funding of about $2.8 million. And as I mentioned, you have your supplementary information after your financial statements, the first being your revolving loan fund. So you'll see the loans paid, the principal paid, and then that interest paid of about $10,000 during 2025. The second one is your schedule of sub-grants. On the 5627 Niagara Falls Boulevard, that sub-grant amount did increase from last year, just based on an amendment there. And again, showing you have that
Is
449.
that juniors?
Yes,
Okay, so that's a grant because it's,
both of these are grants,
right,
yep.
because it's
City Oak,
city owned.
Yep.
City of River Road,
yes, that's town of Wheatville.
gotcha.
So again, showing that $429,000 remaining on both of those grants. And then the last couple pages are really just some more compliance things. So the report on internal controls over financial reporting, based in accordance with government auditing standards, so no issues noted in this report. And then the final report being your auditor's report on compliance with public authorities law.
As we recover principal payments and interest payments off those loans,
Mhm.
how is that, what part of the balance sheet does that end up in? Is that a separate account, like a reserve fund, or is it
That ends up in your cash account.
just cash?
Right.
Sorry, so if I look at cash, that's what we
That's what's
recover.
coming
That's
in.
what's being-
Correct.
What are the rules on, now, did you know this? What are the rules on use of that money once it's paid back?
I know that. It's the same purposes, so you can use it for loans and grants, but you can also use it for assessments, bumper assessments.
Oh,
And the thing with that money is it's not subject to all the federal restrictions, so prevailing wages, Buy America, and some of the other requirements, it's.
So
less
same rules
restrictive.
apply though. In other words, only governmental entities get the grants,
Correct,
and then
yes.
private entity would still get a
Yes.
loan.
Yes, yep, and it still has to be reported to EPA, there's have to be EPA approvals, so it's definitely restricted, like, we can't use it for,
Is there a
So
timeline
far.
on everything to be made, or does it end after a certain amount of years?
no, it's forever. It's until the money is completely gone, and everything is zeroed out.
Any other questions?
No, I thought it was excellent. You're welcome.
And thank you for,
Here, you would need a motion to recommend to the board or that it be accepted as a board.
You're so confused with this committees and boards and everything wrong.
And they're the same people and
Okay.
So,
I would make the motion as that.
it's a motion to recommend to the board of directors to accept the.
I'll second it. All in favor?
Aye.
Okay, great. Thank you so much.
Thank
Appreciate it.
you. Okay, so we have to end this meeting.
Yes, this meeting's adjourned.